Good morning, traders. My name is Neville Hornsey, market analyst with YouTrading, and today is the 25th of March 2021. We've just had the SNB rate decision, and so I thought it'd be a good idea to talk about the Swiss franc versus the US dollar. Okay, looking to the charts, the Swiss franc has been appreciating against the US dollar. This is the dollar Swiss franc chart, and you can see that since 2001, the sort of dot-com bubble highs up until 2011, we had a big depreciation in the US dollar, so an appreciation in the Swiss franc. And the trend has been like generally sideways since 2012, and we're kind of in this big range at the moment where we've tested like the lower bounds recently for the last few months, and we're likely to test the median with this 50-period moving average before testing to the highs, probably, as the US dollar is showing quite a lot of bullish sentiment at the moment, as well as momentum. If we go to the dollar index, we can see on the daily chart, the dollar index itself has now touched the 200 EMA, and it is now testing this balance range here. It would be unsurprising if we tested into the middle of this range to find out whether or not any support and resistance of old still has any, well, in this case, some sellers remaining. But for now, traders will be monitoring the price action around this 200 EMA on the dollar index to see whether or not there's any more room to the upside for the Swiss franc, or the Swissy, should I say. So the SNB basically kept their rate unchanged at negative 0.75%. They do have a negative inflation reading at the moment as well, but they're seeing that inflation is picking up due to higher energy prices, as are all of the central bankers. If we go to the weekly chart, again, you can see that we've been in this range, and the slowdown in the sort of decline of the dollar started really in 2007 for around the GFC, the Great Financial Crash, when the SNB's base rate was 2.5%. And then I've written here in 2008 to 2009 that SNB actually did 5 rate cuts. Well, the dollar sort of declined further into 2011. The SNB went to 0.25%, and then they saw a slight uptick in the dollar and a depreciation in the Swiss franc, and then they went negative for the first time late 2014 into 2015, and that's kind of where the rate not changed since. So hence why we've just had this slow meandering sideways consolidation. If we move to the daily charts, as you can see here on the daily, we're above the 200 EMA. So that's bullish in itself. The Ichimoku cloud is below us and currently colored green. That will be acting as support, and therefore we should be looking for buys. You know, the price action is suggesting that we should be looking for buys. We have got through some old support, which was resistance around 0.927, and that's now acted as sort of where it was resistance is now acted as a support again. The dollar and has been a safe haven during the 2020 COVID crash, and the Swiss franc, the yen and bonds are generally seen as safe havens. So Swiss franc is very sensitive towards the yields, and this recent price action, if you like, in the daily time frame has been tracking both the appreciating dollar and the steepening US 10-year yields. Just recently, since the FOMC, the 10-year yields have kind of, sort of dropped off a little bit, but the US dollar Swiss franc is still appreciating higher. And therefore, I'm imagining be testing this swing high here, which is in the middle of this last balance range before we had the drop off. That will come in around 0.945. Having tested this swing high here, and we're basically around these sort of levels where prices did fall through what was support between June and July of last year. It now looks like that's been tested once, tested twice. We should now be just looking for these swing highs in this range here. We've had a good test of support and a breakout higher. This could have been a bull flag, so maybe there's a bit more room to go before we go higher. A lot of it will depend, as I said, on how the dollar index itself performs now that it's up against the 200 EMA. At the moment, you just need to keep your eyes firmly on the dollar and on the yields, and whether or not this rising coronavirus cases across the world increases this pandemic's sort of problems that we've seen in the past, and whether or not any of the central bankers have to do any monetary policy changes. Okay, take care, and I'll speak to you again tomorrow.